Hey, everybody, Tom Gentile. I want to welcome you to my live stream. It is August 2nd, 2021. Glad to have everybody hanging out with me here. Let's just get through this real quick and get it out of the way here. All of you guys know that I am not an investment advisor. I'm not your investment advisor. And also, stock and options trading and crypto has large potential rewards, but also large potential risk. Okay. Now that we got that out of the way, let's talk about what we're going to cover here during this live stream. First of all, welcome to all of you getting in early here. Glad to see you. Joe, hello. Welcome to the program. And let's see. My plan for today is I want to talk about these market moves. I want to talk about, last week, if you tuned in last week on the live stream, I've been making it a point of taking premium in during earnings season. And for the most part, it's done very well. Now, what I've noticed today, and we're going to look at some various stocks today, but I'm seeing a lot of commodity-based stocks kind of dropping, all right? And that makes good for some premium as well. I'll get into that. We're going to talk about options that are cheap and options that are expensive. And I'm going to be going to the well on both of these, looking for opportunities. And then finally, I haven't done this in a while, but let's talk about finding doubles. And doubles, what we're going to do is we're going to go through a step-by-step process. I'm going to show you how we can get a hold of some very cheap options that are out there right now. And you'd be surprised if you saw what was cheap, okay? There might be a reason it's cheap. One of the reasons I believe is that earnings for most of these companies is behind us. So therefore, there's no aha moment in the near future for certain stocks. We'll talk about what those stocks are and how you can look for potential doubles on these stocks, regardless of whether you're bullish, bearish, or maybe even both. So that's the plan that I am going to be going through with you over the next, I'll call it an hour, give or take. All right. So the thing I want you to do first is let's go ahead and let's just jump on over and let's see what's going on in the market. And what you're looking at right now, this is, I brought it up on my Thinkorswim account. So this is a chart of the SPY. Is a 5-minute chart down here in the lower right. And let me toggle on something. There you go. Lower right. This is Friday afternoon's close. This is Monday's open. This is the high for the first hour. This is the low for the first hour. We are now below that. And you can see here just in the last 15 minutes, these are 5-minute bars. We've dropped out of 439.68 and we're down 438.50. And so we are quickly looking to lose the gains that happened in the market just this morning. In fact, we're flipping over right now from being positive in the S&P 500 to being negative. So I see, as we go into the month of August, things were looking pretty good this morning. I mean, we had, there was some announcements last night that led to, and think about this, the whole purpose, the whole narrative going into the weekend was reopening stocks. Reopening stocks are going to be hurt because of the Delta variant. Okay, so I start thinking, all right, well, what stocks went up when we first started realizing the original COVID vaccine or COVID virus? And those were the stay-at-home stocks. And so look at stay-at-home stocks because they are trying to be on the rebound as well. But the overall market is running into some headwave today. Where is this likely to go? And to get that answer, what I've got to do is I've got to bump into another piece of software here. And I am going to bring up something that I didn't have ready this morning, but I'm going to jump into my option tools and I want to look and see what the money calendar is telling us for the month of August. There you go. August 2nd, red day. All right. So let me explain what it is you're looking at here for those of you that are new with us. So we compile 10 plus years of data on the most popular stocks, about 300 to 400 of them. The ones that are the crowded stocks, the ones that have a lot of volume, that tend to have more, they're the popular stocks. And so what we do is we look at 10 years of data on that. And we're looking at literally millions of data points. And from here, what we've determined is that when you see the 2nd of August, which is today, and you see a number 72, and only 6 of those 72 stocks are bullish, and 66 of those 72 stocks are bearish, that means we have potentially a bearish day that's starting off the month of August. Now, what this means is that over 90% of the time, 90% or greater, in the last 10 years, 72 stocks went down. And of the 72 stocks, 66 went down, 6 went up. So we have a bearish day upon us. And if I click on the 2nd, let's find out what we're talking about here. Okay, we've got up patterns for NVIDIA, GDX, LMT, but then look at all the bearishness that's going on. Right, we got all of these stocks right here that have the red lines beside them. These are bearish patterns in the near future. Now, the one thing that I have to say that makes in some very interesting points of comment is a lot of these patterns are 2 days, 3 days, 4 days, 5 days. I don't see a lot of patterns that are out here in the 20 to 30 day time frame. Sure, here's a pattern I see. Schlumberger goes down. ExxonMobil tends to go down from here. And this makes a lot of sense because we're now out of the seasonal oil trade that happens between February and July. We're in August now. So seasonality says that oil stocks should pull back and oil itself. All right, well, that doesn't surprise me at all. But here's something to think about. When you look at the stock market today, and it's showing us a red day, which is what we're seeing right now, right? S&P 500 is now down on the day. This is interesting how it actually coincides with history. So 9 of the last 10 years, we've seen patterns coming into August, which are typically bearish. However, what we've also seen is, let me continue. What we've also seen is we see the markets start to turn bullish toward the end of the first week. And then more importantly, look at all of this 2nd, 3rd, 4th week of August, where we're coming out here and we're seeing 96% bull on the 24th, 92% bullish on the 26th, 93% bullish on the 27th. All right, 27th is a long way away from today if you're counting by the seconds. But we can see here is it looks like we've got a mixed week. Now, this is the stock market. Let's take a look at the 20-year calendar for August. So if I go to the 20-year calendar for August, this is stocks. Now, I need 20 years of data first. So there's going to be some stocks that are in the 10-year patterns that are not going to qualify for 20 because they didn't exist back then. But you can see that the 2nd and the 3rd of August also were on the bearish side, and then everything else was bullish. So I'm telling you, based on history, that August, after we get past the first couple of days, tends to be a very good month. All right. Now, think about this. Let's couple this with the fact that we've got trends. And I'm talking about not today. I'm talking about trends in the market. Take a look at the S&P 500. This is a daily chart. Look at the trend. It's up. We are bouncing off of all-time highs. We are now moving out of earnings reports. We're going to get some earnings out of retail, out of some retail stocks, a few others. But by the time we hit the end of next week, earnings are going to be behind us. And for Wall Street, no news is good news. And I expect we pile into the majority of August with higher highs heading into Labor Day. And you're going to see a theme that's going to change. Okay. Now, there's no guarantee to this, but the theme that I see right now, and I mentioned it on future or past live streams, are look at the amount of videos on YouTube from so-called experts that say a crash is coming, a crash is coming, a crash is coming. They've been talking about it since April, May, June, July. Here's August. I'm still seeing them. I think these guys are going to go away in the month of August and set up for potentially pullbacks in September. So, a lot of what we see in the markets is I like to be on the other side of the crowd. And right now, there's still that crowded trade to the downside. Again, I might be wrong. All right. We are setting up for potential correction in the marketplace. I just don't know if it's here yet. Maybe it is. How do you hedge a potential move on the downside? We're gonna get into that. So take a look at this is SPY. Let's go and let's take a look at what's going on with TLT today. TLT. There it is. 20-year Treasury ETF. TLT is on fire today. That's what Mike says. He's right. Up 1%. That is a fire. That is a firestorm. When you see the bond market up over 1% in a day, that's a big deal. Okay, because bonds and U.S. dollars, they're not supposed to move with this kind of ferociousness. But that's happening today. Fantastic move, and congratulations to you, Mike, for taking advantage of that. So, guys, we're going to get into a lot of stuff here. Lauren, I want to talk about Qualcomm. So if I don't bring it up, ask me again when I'm going into stocks. But if you take a look here, this is really kind of how Friday ended out for bonds. And as you can see, first hour today low, first hour today high, and then we've just been exploding up ever since. Typically what I see is I see this first hour low and I see this first hour high. And what I tend to look at is when you're taking a look at these, there's a distance between that low and that high for the first hour. Take that distance and add it to the high or subtract it from the low. And those are potential target zones for the day. If you are a momentum trader, if you are a trend trader, all right, that's what I look at as a potential intraday target. Okay. But definitely TLT on the move. Let's take a look at this in a different setup. We're going to take a look at it for the day position trader. Excuse me, TLT. I got the pattern up here right now. Now this is a long-term pattern. What I want to do is I actually want to look at the test. I want to test out that trend. So we'll test out that trend right now, and we're going to do that by coming down here to an area that I call channel test. That's going to bring up these channels. So again, I said it before, I'll say it again. The bonds in the stock market cannot move in the same direction for too long. One of them's got to give. Now, the reason the bond market's moving higher right now is that interest rates are recording new lows. This is going to be good for home buyers in terms of getting a better mortgage. However, it's also going to be good for people who are selling homes because they're going to get more money for their house, all right? Because more people are going to rush to the table and buy. So this idea that I keep hearing that the home market's going to soften, okay, I get it. It has been overdone, but I'm not expecting us to go back to pre-COVID levels here in the next couple of months, like some of the folks on mainstream media are saying. Oh, the lumber market's down 75%. Home prices are going down too. No. It takes more than lumber to make a house. And most people that I find, if you know anything about houses, guys, more houses are being put up with metal studs than they are with wooden studs. So, again, takes a lot more to make a house. I will mention this, though. It's quite interesting that U.S. Steel is off today. I'm going to look at U.S. Steel as well. But that one, too, is a commodity. So we're seeing the steel industry get hit a little bit. I went in, and this is full disclosure, I started selling puts on U.S. Steel today. And they were a little juicy, so I thought I'd dip my toe in the water and bring some premium in for the week. And we'll see how that ends up. But that's the here we go, bond market right here. Bond market moving higher, like I just said, continuing to make highs. We've broken out. We're at all-time highs, or at least yearly highs on the U.S. Treasury bond. So there's TLT. Let's look at the next one, and that is cash UUP. Cash is coming off a little bit, as you can see. Now, I've got a couple of different things going on here, so I'm going to try to slow it down a bit because I'm all over the place. I get it, guys. And the one thing I'm looking at right now is channels, and I'm channel stacking. That's why you're seeing a couple of different channels on top of each other. Now, take a look at the US dollar here for a moment. Okay? See this? We've got a green longer-term channel between 23.9 and about 25.4. And then we've got this shorter term red channel. You see that too? That upsloping channel. Both of these are coming to a head right now. They're coming into an area where, see my green arrow? My green arrow is sitting on red channel support and green channel, that what we call the equilibrium. That's going to be a really good support point for the US dollar. Now, it might take a couple of days. It might take a couple of weeks for us to hit that point because the US dollar is one of the slowest traded instruments around. But that could come in and give us an area for support. And you know what happens when we get a rising dollar? We could see pullbacks in the stock market. Okay. All right. So that is, again, we're looking at UUP. Let's move over to look at USO. Again, my idea with USO is we've seen the highs. All right. If I were looking at this as a aggressive trader, then the area that I'd be putting in for a stop would be somewhere around 52 on USO. Because if you take a look at USO, here's 52. Just below that's a dotted line. That dotted line represents the highs for the year in USO. We dropped. We came right back. Today's a dropping day today. How do you take advantage of a bullish or bearish trading opportunity? I'm going to show you. So, you know, guys, I've said this before, and maybe I haven't said it enough. One of the things that I won't do in the room is front run you. Okay, so front running is where I place a trade ahead of everybody. I'm not going to do that. There are some exceptions to that, and ETFs are exceptions because they're so liquid. No one, you know, no crowd of people could ever jump in and make an ETF move. And so the other thing too is that when I do examples here, and I'll do live trade examples here on the stream, I'll put in the smallest amount so it doesn't look like I'm getting rich off of the YouTube community. All right. Speaking of getting rich off the YouTube community, let me just mention this real quick. All right. Thank you to all of you who support this channel. I will let you know we do monetize the channel. There are commercials that pop in here and there. All right. But all of those proceeds go to charity. In fact, let me just let you know where last month's proceeds went, because we dipped into the YouTube fund, pulled that money out. And who did we send that to last week? Because we do it once a month on average. It's not every at the last day of every month, but we're really close. So let me tell you where that all went, because I'm just checking it real quick. The Friends of Luann Foundation is where this went, and this is a charity, Luann Elise Foundation, and they promote personal growth, educational development to individuals who otherwise couldn't get that without their help. And so we're excited. You know, we go out and we do different charities. I'll mention this real quick too. If you want to, if by supporting us, by subscribing to us, those dollars go right through me. You know, I don't need them. They go right out the door, and they go to charities and people in need. The other thing we do is we also take donations, super chat donations. So if you super chat to us, again, all those proceeds as well go to charity. So I'm thanking all of you, the YouTube community out there, on behalf of these charities. We'll be looking at more charities this month, and we're excited to continue to move that money into great places. I'm going to get to stocks. I'm going to get to everybody's stocks in a moment. Let me just show you real quick. Again, if I take a situation like this, and I'm thinking to myself, USO's now at the end of its bullish pattern. It now looks like it wants to roll over. If I want to take an example of where this could be going, take a look at where the highs were. All right, that we'll call it 51, down to around 46. 51 to 46 is about 5 points. Now, where are we at right now? We came back. We hit 51 again on Friday. So 46 looks like a good support level. Now, the question is, how do I take an option trade, or how do I take a trade where I can make money if indeed USO goes down to 46? You can do a couple things. You could short the ETF USO. Now, shorting the ETF is going to cost you some money. The other thing we can do as option traders is we can buy put options, or we can buy put spreads, or we can do something that makes money to the downside. Let's take a look at a few. So to do that, I'm going to, again, jump into another screen in our software. By the way, while I'm going there, let me just throw this out there too. If you are new and you want to take a 2-week free trial to our software, I'm going to be showing you how to spot doubles using the software today. But if you want a 2-week free trial, down below in the description is a link on how to do just that. All right, so what I want to do is I want to actually go to, and you can do this in your brokerage account. I'm going to show you something that all of you in this room can do. So just get to an option chain in your brokerage account, and I'm going to be looking at USO. I'm going to update that right now, and I'm going to blow it up. And here's what we're looking at, folks. So I've got, USO has options that expire every single week. There's the August 6th options. That's this Friday. August 13th, next Friday, 20th, 27th, 3rd. I mean, and the list just goes on and on. It just depends on how long how long I want to be bearish. How long do I want to be bearish? Well, the pattern actually goes into February of next year, all right? But we can drop this back and make it shorter term, all right? If, in fact, in the stock market, the best or the worst time to be in the stock market is into mid-October, that September to October timeframe, maybe that makes sense. So one example I could do is I could go out here and look at these October options. So they expire on October 15th. I'm going to check mark those real quick. I'm going to uncheck this week's. Actually, you know what? Yeah. I'm going to uncheck this week's. And I'm going to go and look at USO options that are 10% below and above today's stock price. So let me click on update. Now that's going to bring up all of my calls and puts, and you can see them all right here. I want to blow these up for you. So let's go right in the middle. There's the most recent price of USO. These are strike prices below the stock price. These are strike prices above the strike price. If I am bearish, I'm going to move over here to the right. These are put options. Now, these put options, right now, again, they go lower than 45. I just took options that were 10% below stock price. So an example would be if I were to look at, for instance, buying, I'm going to put a 1 in there, buying a 50 put and selling, this will be a -1, selling the 45 put. All right, let's go ahead and click on risk graph. Let's see what this could be done for. So here we go. For $182, I could put that spread on. Now, what does that spread consist of? It means I buy the 50 put for $3.18, and I sell the 45 put, I'm going to get $1.36. Now, if I were just simply going to buy the 50 put, let me get my face on the screen. This is important. If I were just to simply buy the 50 put, and I were to pay $3.18 for it, that's going to be $318 to buy that put. If my target is 45, what's the minimum amount that a 50 put is worth at 45? Well, it's worth 5. If I pay $3.18 for something that's worth 5, then I'm going to get about a 40%. It depends on how you look at it. I'm going to get a little less than $2, and I'm risking 3. So that is not a favorable reward to risk ratio. That's not finding a double. All right. Is this any closer to finding a double? Let's take a look and see here. So if you take a look here, you can see that this particular trade, 318 minus 136, that's $182. But I can make up to $318. The thing is I got to hang on to this thing into October if I want to capture all $318. 2 things have to happen. We have to get to October 15th. And the second thing that has to happen is USO has to be at or below 45. Now, where does it got to go today or next week or next month in order to get a double, right? So in order to find out that answer, we're going to go over here and we're going to look at something called a risk graph. Now, the risk graph And I got two of them here. I've got the risk graph here in front of me here. On the left-hand side, what you see is you see the chart. This is the price chart of USO. On this side, you see the options. This is what I'm willing to risk over here, right? And this is my potential reward. Now, what I'm looking for is when I look at the risk and I see, oh yeah, what am I risking again? $1.82 or $182. So $182, let's round that to 180. 180 times 2 is 360. I need this $5 spread to get to be at least $3.60 to get a double. In order for that to happen, if it's going to happen today, here's where we got to go. We got to go down to around $43. And the reason why is because if we go down to $43 today, the 50 put is going to be worth a lot of money. The 45 put's also going to be worth a lot of money, but when you subtract one from the other, it should come out to be about that $3.60 area. This is a theoretical risk graph. All of the lines you see on this graph, the red, the blue, and the green, they give us ideas of what our options are worth at any given time between now and expiration. The black line, as you can see, it's not curved. This is expiration day. This is exactly what your option's going to go out at, depending where the price of the stock is at the close of October 15th. So think about this. For those of you that are new to options, let me ask the question, because we have some folks in here. How many of you in here are new to options? Please let me know. Just type it in to the chat box, because I'm going to give you a very simple explanation as to what I'm talking about right over there. Not the price chart. We all know what that is. Price chart goes up, price chart goes down. I'm talking about what's over on the other side, on the right-hand side. Okay? The right-hand side of the chart is, this is our risk graph, our option. So if we were to take this particular trade up here, if we were to buy the 50 puts and sell the 45 puts, I'm going to make one easier than this, guys. Those of you that are new, you're probably like, what's a spread? You know what? I'm going to make an easier one than this. But what I'm saying is this. Options are like insurance, okay? How is an option priced? Where did they come up with the $3.18 for the 50 put? Where did they come up with the $1.36 for the 45 put? Where does all this come from? Well, an easy answer is to say that it's just supply and demand. It's the supply and demand and the bids and offers that are coming in. But a more interesting example is, think about this. Let me ask you a question. How do they determine the price of your auto insurance? I just bought a new Expedition vehicle. It was not cheap. And I went to get insurance on this thing for my wife and I. What they do is, and they gave me the insurance price. It was absurd. But what they do is they look at a number of factors, right? What do they look at when you're looking to price out auto insurance? They are looking at how long the policy is going to be, what the deductibles are going to be, all right? What kind of a driver are you or whoever else is going to put on that vehicle? How much is that vehicle worth? So there's a lot of factors that go in, all right? And so when you look at an option price, for instance, that 50 put, all right, so what factors in that $3.18? Well, the strike price of the put does, because you can see the 45 is going to have a different price than the 50. So obviously the strike price has something to do with it. What else has something to do with it? The price of the underlying, okay? And then the volatility, like the driver, the volatility. So options pricing is very similar to pricing any form of insurance. There are some knowns and there are some unknowns. We know what the price of USO is right now. We know what the strike price is. We know how much time is left to expiration. What do we not know? What we don't know is whether or not OPEC is going to put the squeeze to output. What we don't know is the next storm that's going to come in. Maybe we'll get a hurricane that comes in the Gulf and hits the Gulf states, takes down gas, takes down maybe some oil. Transportation from one area to another could get clogged. These are all don't knows. This is what comes into the volatility. So, okay, said enough about that. Anyway, when I look at this, I say to myself, do I want to take this risk, this 182, to make a possible 318? And so if I decide, yeah, I want to take that risk, then it's just a matter of going out, going into my broker's account, putting in USO, right, selecting that strategy, and it's going to be a put spread. And then remember what I was doing? All right, I was looking at the October 15th options. So I got to fix that first. Okay, the October 15s. What am I buying? What am I selling? Well, I'm looking at buying the 50 put, and I'm looking at selling the 45. So there you go. Right now, it's 178 by 201, and 190 is the middle. All right. So if I want, let's say 185, which was close to what the risk graph was looking at, the risk graph was saying 182. Let's say I want to get it, I want to try to get it at 185. Okay. This is what I do in the debit area, 1.85. All right. Now, here, you put in the quantity, you put anything you want in. Because I'm doing this on YouTube, I want to make sure that no one thinks I'm getting rich off of this, putting it ahead of anybody. Because A, it's not going to happen with one contract, and B, here's the other thing, is that ETFs are almost impossible to be moved by any one group. So let me go ahead and preview this, and this will show me what exactly it is I'm doing, how much it's going to cost me. $186.04. That's the extra little commission exchange piece that gets put on there. Let's put that in. That's going to sit out there as an open order. If it trades down to, if someone's willing to take the other side of my trade, I'm going to hear a ding in the background. I'm going to get filled on that and move on. That's how I place an order using a spread. I'm going to show you another one using a stock. We're going to all look at this here in a few minutes. But going back to our stock charts. So we were looking at USO. Let's take a look at gold real quick. Any of you that are gold bugs out there, gold has been very, very interesting in the last 120 days. If you take a look at it, we had a high that happened right in here. This was right around Memorial Day. And then we've dropped in, but we've been slowly creating these higher highs and lower highs and just quietly moving higher. Now, those of you that know me, I'm a long-term gold bug. And I am holding GLD, and I add to it every once in a while when the markets will let me. So I like the pattern that's happening here. We are getting very close to what I call kind of an inflection point. We're not really at one right now, but you got this short-term trend down, and you've got this intermediate or longer-term trend up, and they're heading into a resistance area right around 174. So keep an eye on that for those of you that are gold traders. Again, I'm more of a gold investor. I'm not really a gold trader. That's GLD. Last week, I was talking about two things on the podcast that I was doing with Chris Johnson. All right. Those two big things were Amazon, because I did really well on Amazon, selling premium on Amazon. I'm selling premium on Amazon again this week too. But the second thing I talked about was the VIX. I was talking about how low the VIX was, and that I went out and grabbed some juice in the VIX, because a couple things here. When the VIX is low, it's time to go. Everybody knows that. You've heard that before. Now, how do you take advantage of a low VIX? How do I take advantage of a low VIX? I'm going to show you a couple of ways of doing that. Okay. Number one, we could buy the VIX. Now, VXX is an instrument that I'm looking at right now. This is VIX futures, but you could look at VIX too. They both pretty much move in tandem with each other. I'm just used to VXX. VXX just went through. You see that S over there? That was a reverse stock split. Oh, you can't see that. Now you can. That S is a reverse stock split. What happened was VXX was getting so low, they reverse split. They took shares out, and it got repriced higher. So now VXX is trading around $30.91 is what I see as of right now. Okay, so when the VIX is low, it's time to go. That's a narrative that we used to have on the floor that basically said, get ready, because the stock market looks like it wants to pull back. All right. Claudio, you really asked the right question at the right time. I really love to answer everybody's questions and talk about the stocks that are out there. I'm going to do my best, but you're asking, does VXX have a built-in time decay factor? It kind of does. It's something we call contango. And what contango basically is that there's a price on VXX, which is kind of built into the actual futures. It's the futures VIX. It's somewhere between now and I want to say about 20 days ahead in the future of where the VIX should be. But don't look at the VIX being at 17 and the VIX futures at 30 and saying to yourself, oh, the VIX is going to 30. That's not it. Forget about the prices. They're literally lockstep. They're together, even though the price is different. It's kind of like the difference between having a 25-cent piece and a dollar. If you've got 4 25-cent pieces and you've got a $1 bill, you have the same thing. Think of the VXX and the VIX the same way. There are less VXX shares out there. Therefore, they're going to be priced a little bit higher. But at the end of the day, it's all the same thing. But yes, to answer your question, VXX does seem to have a downward shift to it because of that futures that future meeting today. There is a little bit of a drawback on that. All right, which is why I'm not a fan favorite of buying calls on this, unless you are looking for a move like what happened 2 weeks ago. You see that little move there? That in 2 days you went from below 30 to above 35. I mean, in, out, very quick. All right. If you're not that kind of a trader, if you're someone that, looks at several days to be in a trade, then this is one where you've got to, I like to put probabilities on my side. Let me show you a couple of examples. Number one, we could go in. I'm actually going to bring up the options on option chains on VXX right now. So let's just look at this Friday. 4 days to expiration. All right. Let's go ahead and I'm going to make this 20% because I don't know what it's going to give me. So here we go. Oh yeah, it gave me a lot of strikes. Take a look at these call options. So the VIX is at 30.91. All right. And you can see the 31 call is trading for 95 cents. If I were to buy that call, this is going to be a much easier example for those of you that are new to option trading. It's going to cost me $95 per position. Okay, that's again 95 cents times 100 because there's 100 shares in a option contract. So you do the multiplier, and you say to yourself, all right, well, that means that I'm risking $95 per contract, but I have unlimited profit potential. Listen, I have to say unlimited because that's what the risk graph gives us, but it really is limited. It's limited to how high the underlying goes. Now, let's take a look at what the risk graph looks like here. See, this looks a little different than the last one I showed you. The last one I showed you, it came up and then it went straight up. So there was a certain amount you can make and no more. So left-hand side is the chart. Right-hand side is the graph. And as you can see here, this blue line represents where we are today. So right here in the middle is break even. Now look what happens if the VIX doesn't go anywhere over the next 4 days. You're going to see this thing tick into the loss side. That's time decay. Time decay, one thing is a guarantee. Your volatility eventually goes to zero because you run out of time. Okay? We have to determine whether or not the VIX is going to go up and replace time decay with something real, meaning this. We really would like to see this go to 32. If it goes to 32, actually 33. If it goes to 32, we make a nickel if it happens by the end of the week. But if it goes to 33, that 95-cent cost is worth $2. So you've now doubled your money on the VIX. Let's see if there's another way we could do this. So I want to go back to the VIX once again. That's USO. Let's go back to VIX once again. And this time what I want to look at is potentially something else. What if we were to buy the 31 and sell the 32? This is that bull call spread. Again, all we're doing is we're selling something to help pay for something else. Now, the trade doesn't cost me 95 cents, cost me 27 cents or $27. Now my break even, see when my break even was at the 95-cent level? We had to get to $31.95 by the end of the week to break even. Look where we have to go here, $31.27, a much smaller jump. The other thing too that I see is that this trade could triple, nearly triple, no, quadruple in value. You could have a triple here if we get to or above 32. We go above 32. Now, what happens at 32 for the call buyer? They're lucky if they break even. If you get to 32 by the end of the week and you got this little spread on, you could nearly triple your money, right? Your $1 risk becomes a $2.70 reward. So in this case, the $27 for the contract could be worth $73. And I know I'm dealing with small numbers here, but this is a couple of examples. Now, who was out here? Let me look down here a little bit and let me look through the comments for a minute. I saw somebody that came in when I said, how many newbies do we have in here? And somebody in the room said 20 years. They were in here for 20 years or 20-year trader. And of course, I can't find. Oh, here we go. Oh, my VW, 22 years, not new, 20 plus years. Excuse me, 20 plus years. All right. So VW, I saw you here last week. I see you again. I'm going to throw you one. I'm going to throw you an example of something that, one of the things that I would look at doing with a trade like this. You ready? Here you go. What about a combo trade? A combo trade is the ability to, let me clear some of this out because this is getting a little bit, there's a lot of stuff going on here. So let's bring this down to 10%. That way I'm looking at less options. And a combo trade might look something like this. All right. So what if I were to take a look at, this is as close to the money as I get. So I'm going to do a 31 call and I'm going to pay for it. Maybe I pay for it with a 31 put. So a -1. Okay. This is what's called a synthetic long, being synthetically long the position. Now take a look at the risk graph on this one. It moves up and down just like the stock. Okay. Why do this? Why not just buy the stock, Tom? Well, a couple of reasons. Number one, you're already getting a $30 credit to put this trade on. Okay, so you're buying for 95 cents, you're selling for $1.25. Now, you got to look at this a little bit closer. This is based on a $30.91 VIX. So your 9 cents, $30.91 is 9 cents from 31. So we take the 9 cents off the $30 credit. You still end up with a $21 credit on the trade. Okay. If you could get this trade off and buy 100 shares of stock at the same time and actually get filled on this trade at $30 credit and get filled on the VIX right there at $30.91, you are locking in $21 every time you do that. That's a lock. That's a $21 lock every time you do it. Now, there's going to be slippage here and there, so you might not be able to lock that in or not lock in as much. All right. So that's really kind of collaring this position. Let me show you another one. VW, you want to see another one? You may not be excited about what I just showed you. You might say, I know this already. Maybe another one. All right, let me show you another one. So for those of you that know what condors are, I'm going to show you a little bit of a different one. All right, so it's a multi-legged spread. They're called combo trades. Multi-legged spread might look like this. So let's take this VXX trade one more time. I've got to find that stock and option graph. There it is. So in this case, we bought the call, we sold the put. Okay, let's go down and let's buy a put for protection, and let's sell the 32 call. So now this makes it even a little bit different. What we're doing here is what I like to refer to as a fence trade. This is a synthetic spread. So what you've done is, keep in mind, we've taken in $36. We have the ability to bring in a maximum profit of $136, but we're risking 64. So you have more coming in than you're risking. And get this. If the trade stays exactly where it is, this thing slowly makes money. How do I know this? Because down here where I have probabilities, look what happened to the probabilities. They actually go into my favor a tad. Okay? So what I'm showing you here is advanced options trading. I wanted to go from one end of the spectrum to the other, just to show everybody what is actually out there for those of you that are interested in looking. All right, let's dial it back a bit. I know I went way over what some of you in the room can understand simply because of your level, but let's talk about doubles now. All right, I want to talk about doubles. Before I get into doubles, however, I do want to share with you, let's get rid of a few pages here. Morning report. I brought the morning report up this morning. I was looking at what are my expensive options and what are my cheap options. Interestingly enough, coffee is still expensive. A cup of coffee is going up, folks. It's going to go up. Anybody that's had their coffee price too low, they're raising the cup by 20%, 10-20% immediately because coffee is just going higher. Coffee's the new lumber. But I also see a couple of like AMC Technologies down here, number 9. Okay, they're reporting earnings this week. That's part of the reason why they're on this board. But look at the cheap side. This is the side I want to deal with. All right, so Lauren, when you wanted to look at Qualcomm, we're going to look at Qualcomm. We're going to look at Qualcomm because it's cheap. But look what else is cheap. Microsoft, Snap, Procter & Gamble, Coca-Cola, Qualcomm, Alcoa Aluminum, Philip Morris is on here, Fastenal's on here. That's Burger King, all right, QSR. It's basically the company that franchises Burger King. And Masco, all right? I was looking at all of these last night because this is based on data from the close of Friday. So when we come into Monday, I see this. So why we call it the morning report. You get to look at it the morning before the market opens. And so as we see this, I look at this and I think, all right, why are these so cheap? Now, Snap isn't exactly the cheapest thing on the block, but it's cheap compared to where it was. But take a look at Microsoft, 18.19. This is a very, very low implied volatility. It means the options are very cheap right now. Same thing with PG. Same thing with Coca-Cola. Same thing with Philip Morris. I mean, all of these, when you look at them based on where they were, they are all cheap. So if you like any of these stocks, all right, if you like any of these stocks and you like them for potential bullish or bearish opportunities, this is the time to be looking at them while their options are underpriced. Now, let's do this. Some of you probably are wondering, how do I get a hold of this? How do I get a hold of this link? Well, you can get it for free. If you're brand new with us, guys, I want you to check this out. Come on over. Let's take a look at an app that you can download off the. You can download this off of the Apple Store or the Google Play Store. It's called TG Suite. TG Tom Gentile Suite. Make sure there's a space in there when you're doing a search. Type in TG space SUITE. Run your search. You'll find it. Download it. And now this is the part where you're going to take one road or another. If you're a software user of ours, just use your username and password. If you're not a software user, that's fine too. Down at the bottom where the logins are, you're going to see a non-subscriber login. Log in under the, or hit the non-subscriber login, fill out your name, your email address. You get this morning report too. Now, what's going to happen is you're going to open it, and it's going to come to these 7 different buttons, these 7 different scans. The top 6, these are all premium scans, all right? We have these for our premium research alerts and our premium folks that are part of our software and our master classes. But the one at the bottom, and I got the red X2, the red arrow and the green arrow pointing at it right now, says MR, Morning Report. When you click on this, everyone in this room has access to these 6 different reports. We have the high volume report. We have the high open interest report. We have the unusual call and unusual put volume. And we have what I looked at today, and that was expensive and cheap options. Now, I'm going to use the cheap options, and I am going to go and I'm going to look at these cheap options, and I want to look at them a little differently. So I want to look at them in something called Double Finder. Double Finder, or a calls and puts double finder, allows us to punch in stocks or an entire list to see how far the stock has to go for the options to double in value. Okay, so let's start with Microsoft, MSFT. I'm looking for lowest percent to double calls. If you're bullish on Microsoft and you have some reason that you want to look at Microsoft to be a buyer of it, and let's say that you're looking at this within the next, I'm going to say 15 to 45 days. I'm going to plug that in, and we're going to save that. Oh, short-term doubles. I already have one of those. That's okay. We'll just go to short-term doubles. Let me back this up. I can look at long-term, which I have been looking at. That's my bad. Let's get in here again. Even the founder can't figure out how to use his own software sometimes. Options, for those of you that are using this for the first time, if you're one of our software folks, go to searchers. You can go down to single strategy, come on down, and you're going to see one that's called Double Finder. Click on that. And I've got wizards, and I'm going to click on my short-term wizards. All right. There we go. And then I'm going to do a search on, right down here, I'm going to do a search on MSFT, Microsoft. All right. So here's what we got. So Microsoft is coming up with 3 potential ideas. The SEP, the October, and the November. The September options, $7.50. The October are $10.13, and the November are $13.60. Now, keep in mind that these are at the money. They're right at the money. What they're saying is basically you need the stock price to move 4%, 6%, 8%. And you might say, well, gosh, that's a big move for a stock. It is. But if we were to look at just what's happening right now in the next 15 to 45 days, okay, let's run that search one more time. Now you're going to see, here's the September 3rd, $6.98. We need a 3% move in Microsoft between now and then in the next 30 days to get a double. That's the calls. You can do this with the puts as well. Now, I'm going to show you one more way we can basically search all 10 of those stocks. Remember these stocks right here, the morning report stocks? All right, so what I'm going to do is I am going to take these 10 stocks and I am going to throw them into a list. I'm actually going to take my stock list and I'm going to put these 10 stocks in my stock list, and let me do that real quick. So I'm on another screen. I'm going to put them in. I'm going to slide it over and show it to you guys. All right. So you know that I'm putting this in the right area. So here we go. So I'm going to edit my list. You know, the list that I had all the stocks in, and I had the Dow, the S&P, the NASDAQ, all that. Okay, so MSFT, SNAP, and then PG, KO, Qualcomm, AAMO, FAST, QSR, and MAS. Okay, I'm saving that list right now. There they are, all 10 of them. I got it all right the first time. Here it is. There's the 10 stocks. I punched them all in. The reason I did this, and they're saved, they're ready to go, is that now what I can do is I can go to my double finder. And in this case, I'm just going to run it on the entire stock list of those cheap options that I just found. And here's what we get. Look at this, Procter & Gamble. Procter & Gamble, out of all the options that I just showed you in the cheap list, they just need the least amount of move. They need the least amount of movement in the stock. PG. Microsoft was number 3. Then there's some more PGs. These are option trades. These are option trades. That's why you're going to see PG on here 5 times, because it's got 5 different option trades that you could look at in terms of finding doubles out there. All right. So there you go. That's finding doubles. Now, I got one more thing I wanted to share with everybody, but before I do, let me spend a few minutes coming in and taking a look at what we got going on. So, Lauren, you know what? You mentioned Qualcomm has cheap IV today. You know it does. I don't think I need to share that with everybody again, but I mean, you saw it. You saw cheap IV. It's got some of the cheapest implied volatility that's out there right now. In fact, actually, if you want to look at the chart of IV on Qualcomm, this is how you do it. I go to stocks, charts, stock charts, and I'm going to overlay Qualcomm. So I'm going to put in here QCOM, and then what I'm going to do is I'm going to overlay the stock chart with a volatility chart. So take a look at this. All right, let's blow it up here so you can see it. So there's Qualcomm. See the stock price? Down, and then up, and then down, and then up. Take a look at the IV. The IV's up, and this was earnings, and it crashed. And it got low, and then up, and then earnings, and then crash. So last week, Qualcomm, you want to sell premium because everybody was buying. This week, you want to look at being a buyer of premium because everybody is a seller. So if you take a look at this chart and you say to yourself, wow, we're still popping. 3 days after earnings, we're still popping all-time highs. I think it's going higher for whatever reason you're using, whether it's technical, seasonal, fundamental, whatever it is. Now's the time to be looking at call options, not last week. Last week, the call options were so expensive that even that move up, potentially there's some people that are out there that lost money even though they bought calls last week because they were buying them too expensive. So I wanted to start out with you, Lauren, because you brought that up. Russell's asking about ZTS. ZTS, let's take a look at ZTS real quick. So ZTS, I'm going to pump that in. You know what? I was looking at this one last week for a money manager that got in touch with me. And he said, what do you think about ZTS? I remember it because last week I was looking at it with him. And I said the same thing. I said, technical, seasonal, fundamental. I said, you know what? Look at the IV. And the IV was really kind of all over the place, which tells me, you know, when you take a look at this, the IV is actually starting to climb a little. So, you know, we're talking about a $200 plus stock. This is one, as an option trader, I wouldn't go necessarily run out there and grab a bunch of calls because the options are on the high side of volatility. You know why? Take a look at this. Earnings in 3 days. That's what's happening. This is one where I'm telling you, by the time we get to Thursday afternoon, Russ, these options are going to be even more expensive. They're going to be more expensive on Wednesday, Thursday afternoon when the announcement comes out on the 5th. Probably after market close too. All right. Oh boy, what do we got here? Mary, thank you so much. Thank you so much for the comments. I enjoyed this live stream. I'm actually, guys, I'm actually was toying around with maybe stopping the live stream and just focusing on videos. But you know what I'm going to do? I'm actually going to change the live stream. And what I'm going to start doing is I'm going to start doing this live stream earlier in the morning. So starting next week, we're going to drop this back to somewhere between 9:30, 10 a.m. So I'm going to get this thing out even earlier. So just to let you know, all right, what my plan is. VXX to 131.5. Yes, I agree. I'm looking at. I'd love to see it at 31.5 because I am a put seller on that as well. Let's see. Moving on here. Does VIX? Okay, we discussed that already. How do I think Bitcoins is doing? How do I think Bitcoins is doing? Well, I'll tell you what I mentioned on Thursday. I am looking for a weekend, a Saturday and a Sunday where we get nothing but buying going on. All right, so that's really what I want to see. I want to see Bitcoin. I want to see a weekend where we're seeing buying without the stock market being opened, and then I think we move on up. But I'll let you know this: Last week, 42,600 was my target, my first target. Let's go see how that did. So let's go take a look real quick. Crypto tools. And I'm going to go to my charts. I'm going to blow this up in just a second, guys. It takes a few clicks to get to where I want to go. Coinbase. And I'm actually going to be looking at the actual chart itself. And let's go ahead and type in Bitcoin, BTC. And I also want to put the Fibonacci ratios on because you're going to see something very interesting. Here you go. Take a look at that. Take a look at what happened Saturday. We hit 42.6 and change, which was right on that 38% retracement level. We need to close above that. We need two things to happen. A, need to close above 42.6. B, we need a weekend where people were buying Saturday and Sunday, not buying on Saturday and selling on Sunday like they did and like they've been doing over and over again. That's what we need to see. All right. So that's my thought on Bitcoin. So there you go, guys. Let's see what else we got going on. You're doing great. You're doing great too. Is it Gervaison? You're doing great too. Thank you very much for the comments, guys, and all of you. Let's moving on. Has Tom covered Amazon? Nah, you know what? I really didn't cover Amazon yet, but let's go ahead and cover Amazon. All right. So Amazon, I want to go back. Let's go back home. And you know what I need to do is I need to get to my actual stock tools. Let's take a look at Amazon. To me, I think Amazon goes higher as the the reopening trades go lower. So you know what? Forget this. Let's go over here and look at Amazon. AMZN right on the real-time chart. Here you go. So what happened last week with Amazon? Well, the unthinkable happened. And I'm going to bring us back to a 15-minute chart. Here's Amazon Thursday. And again, Thursday afternoon, I'm on a live stream with Chris Johnson. We're having a conversation. And I said to him, something weird is happening. Something weird is happening that I have not seen for maybe ever. And he said, what's that? And I said, Amazon and a lot of other earning stocks, it's weird because it's like people are getting smart and they're selling that premium the day before earnings and 2 days before earnings. And what I'm finding is if I want to be a seller of premium, I got to be selling a week ahead of time or a couple of days, and I got to be buying it back a few days, a day or two ahead of time. And so I took my Amazon position. And guys, I was short strangles. I had some condor positions on, but I was short strangles going into the week. And I had made a fair amount of money. And I reduced my position by about 80%, left the other 20% on. And yeah, they expire worthless. They were great. Should I have left the entire thing on? Of course. That's what hindsight is for, to tell you what you always do wrong. Okay? Spouses do that too. At least mine does. But here's the thing. The Amazon trade, what we've seen is we're seeing these drops, and we're starting to see that happen. And yeah, SPG, same exact thing. It's not happening with all of them. But what we're starting to see is we're starting to see a bit of a change. And that's okay because I can react to that change. My software can react to that change. We just have to see it happen. We have to see it happen once. And then it gets recalculated in and everything shifts. So I was actually talking to Mike Wade, who works with me, and we do a lot of research on trades that are coming in and out of earnings. And we're starting to see this quarter, we started to see a shift. And so what's going to happen? We're just going to shift it too. We're going to shift ahead a little bit more as well. We want to stay ahead of the crowd. The crowd, it took them years. It took them years. But finally, some of the crowd is starting to catch up with us. We need to jump ahead of the crowd a little bit more. You know, it's kind of like jumping ahead of the line. Yeah, and we all know, all right, well, maybe not so much anymore, but you remember the day after Thanksgiving when everybody used to line up early Friday morning at Target, at Walmart to get those Black Friday deals? And then there were just too many people showing up that morning. So in order to get to the front of the line, As soon as you were done with your turkey leg, as soon as you were done with the mashed potatoes, the gravy, the cranberry, whatever it is that you're putting down your mouth, you were hopping in the car and you were camping out that afternoon, that evening to get to the front of the line. It looks like that's what we're going to have to do going forward with some of these stocks as we go into Q3 earnings. We're going to need to jump ahead of the line a little bit. That's okay. We can do that. So that's what happened with Amazon. And with Amazon, here's what also happened. The stock dropped, and we were down. Remember, this is 3,600 up here. This is 3,300 down here. This stock dropped 7.5%. Now, once it made the drop, it pretty much floated sideways. But it was interesting. The volatility in the options that expired on Friday, they did drop. But this week's volatility jumped because of the price that happened. So what did I do? I covered Amazon. I covered my trade. And then I replaced going out, looking for that next big width. And what's the width I'm looking at now? As I'm at I think my trade is around the 3,100, 3,600 window. So as long as we don't go above or below those by Friday, trade's looking good. Okay. I like Mike Wade too. He's good. I like Mike Wade. Gervason, good comment. I'll pass it on to him. All right. So that's that's what we see happening here, guys. Now, hey, before I leave, I want to show you one more thing. This is something that I use, every once in a while, and I look at my portfolio in. And we have the ability to do this. We've had it for the longest time. I just thought I'd bring it up, share it with everybody. We have our own correlation analyzer here with Tom's Option Tools. And basically what we can do is we can set a group of stocks and go back. And I've been correlating. I've been looking at correlations for the last 10 days. Okay. Or 20 days, excuse me. I go back to 20 days. And what I'm doing is I'm going to run a correlation. Now, we're going to run a correlation on, let's run a correlation on FANG stocks. Right? We'll look at FANG stocks against the DJX. So I'm looking at all the stocks in my stock list, which before just now was FANG stocks, and of course, gold and oil and this and that. And I want to see what's correlating together. So we could run that list. And this is what I've come up with. All right. I'm looking for what is the most highly correlated on the list. As you can see, DIA is going to correlate almost precisely with DIA because that's what I ran it against. SPY, QQ. Now, SPY correlates very well with DIA, but look at the Qs. All right. Technology and the NASDAQ heavy QQQ is only correlating about 72% to the Dow Jones Industrial Average. Now let's look at some individual stocks. Apple's correlating 66%. USO is correlating 57%. Google, 47%. Facebook, 40%. Amazon, 13%. So do you know why I like Amazon as a potential trade in my portfolio almost week after week? Because it doesn't correlate with the Dow. It doesn't correlate with the stock market as much. Look at gold. Doesn't correlate at all. The closer this number is to zero, the more it is random. The closer it's to 1, the more it correlates with the underlying instrument. And the more negative it is against 1, it correlates completely the opposite. So take a look at VXX. VXX it moves actually opposite of the stock market. We all know that. But look at TLT. It's only moving about 68% against the stock market. UUP only 23% against the stock market. The ones that are moving regardless, they do their own thing regardless of what the stock market is Netflix, GLD, and Amazon. Those are so close to zero. And what a zero means is that one day it might be up with the market, one day it might be down with the market, one day it might be flat when the market's up, one day it might be flat when the market's down. It's doing whatever it wants. So if you're looking for instruments to trade against the Dow or the S&P or whatever it is, and you're trying to hedge off some overall market risk, this is one good way to do that. By going in and looking at correlations. You can correlate whatever stock you want to. That's the approach that we use. Somehow I managed to make myself go blank for a moment. I apologize. So anyway, guys, thank you all so much for being a part of this week's live cast. We'll have a recording out. Well, recordings, I think, is happening pretty much simultaneously. If you're new to us, do us a favor. A couple things you can do for me right now before you head out the door. Number one, like the video below. It helps support the channel. Number two, if you're brand new with us, guys, subscribe. We do about 2 to 3 videos a week. This week, I'm going to do a step-by-step on how to find and spot double opportunities out here in the marketplace, especially now that earnings are behind us. Thank you all very much for attending. Have a great rest of your day, and we'll see you again soon. All right. Bye, everyone. Thank you.